Hi fellow traders. So we all are looking today at FOMC federal FOMC data. So the FOMC economic projection, federal funds rate, and FOMC press conference. These are the three things uh, which are hottest today. And I'm going to talk about how we are going to analyze it and how we are going to use this information in trading. So if we look at the recent inflation data, so CPI came as expected. There was no surprise. Even though PPI beat the expectation, market is anticipating that there is a 25 basis cut. So federal funds rate numbers are not going to surprise, and as per expectation, there will be a cut of 25 basis point, and this is going to be released. So what we need to look at? So we need to look at two things which are important. One is FOMC projection, and another one is press conference. So I will go step by step. No surprise in the fund rate. FOMC projection is the second thing, and the press conference is the third thing which we have to look at. So first is not going to surprise us. Second is second is the projection, where we need to look at these things. So right now we are on the website of Federal Reserve, and we need to look at the numbers which were released like this last time. So forex market is more likely moves according to the very recent projection. So for example, comparison between 2024 and 2025 for the median. We do not need to see anything projected for 2026 or 2027 or anything for central tendency or range. We simply can focus on the median 2024 versus 2025. So these were the numbers of the last time. For example, I cannot select the numbers vertically, so you need to look at this cursor. So look at the cursor. I will show. So this is where we have to see what changes was made. So if the changes are hawkish, you can simply understand if projection of GDP increases and projection of unemployment decreases, projection of PCE increases. So these are the things which will boost US dollar, or else it will uh, create a bearish scenario. So this is where we need to see this, and it will be released, and it will soon be available on the website of Federal Reserve. Moreover, you can also have other data sources, and where they immediately give you these numbers, so you do not need to go to the website and look at this, because it will consume your time. And however, there is no rush to get this data this time, because of the third factor, which is more important factor, the press conference. But before I go there, let's look at another thing. So number one is to look at the median projection, and this number which will come. This is the previous one, so we do not need to use it, but I'm just using it for example. And then we will simply go to the dot plot. So you can see there are 19 dots. These are actually representing the votes of 19 Fed officials. You may be aware of the FOMC members, 12 FOMC members who are actually the presidents of regional Federal Reserve banks, and there are 7 members of Board of Governors of Federal Reserve System. So their vote is represented like this. So it's then again we're going to look at the 2025, the nearest year. We are not going to look at the any projection for any year like 2026 or 2027. So it simply shows that right now, if you look at, there is a vote, only one vote above 4%. All other votes are below 4%. So 18 officials out of 19 are expecting the funds rate to stay below 4%. So if it will change, what I'm trying to say, if in simple terms, if the more dots will shift to the downside, it is bearish, and if dots will shift to the upside, or will still stagnant, that will also be a slightly bullish sign. Why stagnant will be bullish sign? Because it will show that there may be a pause in further cut rate. And today's press conference is all about whether or not Federal Reserve is going to pause cutting the interest rate every time by 25 basis point. So today's cut is final. That 25 basis point cut is going to be released today, but the press conference will be all about whether or not next time they are going to cut by 12, at least 25 basis point. So there are economists anticipating pause in further cut, and there are economists who are anticipating that it will continue to cut by at least 25 basis point. The factors which are supporting the idea of continue cutting by at least 25 basis point is somehow some way related to the fiscal policy. Although Jerome Powell always has stressed that his decisions or the decision of the FOMC is no way influenced by uh, changing governments. However, if we look at the system, we do understand that there is somehow somewhere a connection between the fiscal policy and the monetary policy. And if we look at the Trump style government, definitely his fiscal policies will more likely need the rate cut rather than pause in any rate cut. So these are the factors, and we have to see how he handles the questions in the press conference, whether he gives any hint of pause in the further rate cut or not. If there is any hint of pause, it will be bullish. There is no hint for the pause, or if there is anything like it will be based on the data, or if he, which is not, I mean, anything which is ambiguous, which is not a clear signal that he is going to pause, because pausing the rate cut is going to be a difficult decision irrespective of stick inflation. So that is what we are going to see. So this is all about these three factors: number one, number two, and number three. So number three is all about understanding the pausing, whether he will pause or not. Now we have to figure out which currency we are going to trade against the dollar, because of course we're going to trade dollar, but we have to figure out dollar versus what, euro or pound or Swiss franc or Canadian dollar or what. So let's go to the chart and try to understand. But before I show you so many charts of so many currency pairs, I will simply give you some rationale why I'm going to suggest to you only two currency pairs to look at. One is Euro USD and another one is USD JPY. So in case of bullish dollar, we will buy USD JPY. In case of bearish dollar, we are going to buy Euro USD. And reason is, if we look at the pound, so the interest rate decision from the BOE is coming on Thursday, so we do not want to touch pound. Swiss franc. So there was a negative surprise from the Swiss National Bank last week, and they actually cut the interest rate by 25 more. I mean, by more. They were expected to cut by 25 basis point, but they cut by another 25 more, so total 50 basis point. And right now the scenario of Swiss franc is something like that. The carry traders are looking for the opportunities to trade against Swiss franc to earn swaps, just like people have been doing against Japanese yen. So Swiss franc is not a potential currency to trade against dollar in any side, because if we want to sell USD CHF, it is really going to incur daily swaps, heavy daily swaps. If we want to buy USD CHF, it is still not going to give us as much swap as USD JPY can give you. So nobody will go for USD CHF if he is or she is a carry trader. So Swiss franc eliminated, GBP eliminated, Canadian dollar. So if we Canadian dollar anyway by nature is a risky currency and kind of commodity currency, so it doesn't move against dollar in any direction, just like euro or Japanese yen moves, if we simply look at the historical price action. However, if we also look at the recent factors, for example, recently CPI from Canada and retail sales from the US were released on the very same day, and even though core retail sales actually couldn't beat the expectation, it disappointed from the USD CAD. I mean, the CAD couldn't gain against US dollar, and there is a persistent uptrend in USD CAD. You can see this, and this is not stopping anytime soon. And even if there is there is going to be a bearish scenario after this FOMC events, I do not see any reason to buy Canadian dollar. I mean, I do not see any reason to sell USD CAD, because comparative movement in euro to the upside will be much bigger than the movement to the downside in USD CAD. So that is the reason why I'm eliminating CAD on CAD too. So Swiss franc and pound and Canadian dollar are eliminated from my trading idea. Now remaining currencies are Japanese yen and euro. So if of course we are going if there is a bearish scenario of, let's say, I mean, after the FOMC, if it gives us a bearish scenario, we do not want to sell USD JPY because of the negative swap. So rather would like to buy Euro USD. The swap to the long side in Euro USD is also negative, but it is way less compared to the negative swap in the short position of USD JPY. It is, I mean, 10 times less. If you want to see this in the market watch, I will show you how you can understand this. So see, USD JPY specification 22.48. Euro USD specification 5, not 10 times. Swap long is 5, so 5 versus 22, almost 5 times, 4.5 times bigger negative swaps in case we are going to sell USD JPY. So why would nobody would like to do that? So we simply will focus on long of Euro USD in case of bearish dollar. So now we'll come to the technical. What are we going to do? So I will give you the scenarios both for bearish and bullish dollars. Let's talk about the bullish dollar. It is already pretty close to the previous major support. I'll take you to the 4-hour time frame, and you can see this was the previous support around 424. So if we have bearish dollar, market will correct more, because the whole correction to the upside so far after this fall from this point to this point has been only 33%. This was the swing high, and this is 33%. You can customize your measurement tool, for example Fibonacci. I'm not using the levels suggested by Fibonacci. I'm just using this tool just for the measurement. So because there is no such thing as 33.33% label in Fibonacci, there is 38.2. But it didn't go to 38.2. It was precisely 1/3 correction, which is the minimum correction anticipated, and it was also nearest resistance, because earlier it was the support. It was the support here, and that made it the nearest resistance. So next time, if we see any bullish move, this will be taken out, and next will be this area, and this again is a significant level, 38.2, 106.66, and previous swing low, which was a support, now has turned into a resistance. So it will become a conference resistance. So 106 and 106.689, 106 1.06689. This will be the nearest resistance areas where we can exit our buy positions. We can split our trade into 2 positions with 2 different targets in case of the bearish dollar. Now in case of bullish dollar, what we have to do, you can see here on the chart that USD JPY has been moving to the upside, just like it has been moving in the past, and it is because of the carry traders who are holding on to the buy trades to make more and more money, not just by the upward movement but also by the swaps, because there is a significant swap in the long side. So since December 3rd, it has been moving to the upside, and I won't be surprised to see it go to 155.72 or even 156 area in a day or two if there will be a bullish dollar scenario. So this is our view on the charts, and let's see what happens in the FOMC. And if by any chance, if you get stuck in a position and market then starts going against your desired direction, you still have to plan for the exit in loss. So exit in loss can simply be planned by the by looking at the previous low. So if in case you figure out a uh, bullish dollar out of the whole FOMC events, and still market doesn't market, let's say, moves to the upside for a couple of minutes or hour and then starts going down, then we need to wait for the closing of the day. If entire day today will close as bearish candle, we need to exit in the loss irrespective of whatever we figured out from the FOMC events, because we need to understand some other factors which may have influenced the market, and which may be more important than what three factors I have discussed. But it cannot immediately be figured out unless we have more information. So even after all analysis, all the factors, sometimes the trades can fail. So we have to be ready for the adverse scenario. So that's why if I see a day closing as a bearish in USD JPY, irrespective of what happened in FOMC, I will take loss and exit my buy of USD JPY. Similarly, in Euro USD, if I figured out a bearish scenario for the US dollar and I went long in Euro USD, however, if I see Euro USD whole day closing as a bearish candle, it's already bearish. So the FOMC overall, result of the FOMC will have to be surprising enough to change it from the bearish to bullish. Otherwise, if it stays bearish and it closes at bearish, then I'll have to take loss and close the trade irrespective of whatever I figured out from the FOMC. So all my 3 points, like what I discussed, should be ignored, and you simply have to look at the closing of the day to close the position in adverse scenario. So that's all about today's FOMC analysis of FOMC events and planning for the trading dollar against any currencies, these currencies.